All right, good afternoon, everybody. Check, check, radio check. Chris Lester here with Professional Planning Services. So welcome. It's been a couple weeks since I've been here. Last week I was in Arizona with some of our advisors. The week before I was in Florida, Jupiter, Florida, again with advisors. I was back after my trip from Mexico, but it seems like February went like that. This presentation is something that I started doing when COVID hit, which is a market update. And just keep in mind that this is really a Monday day quarterback sort of rear view mirror look at what has happened last month. But that month, even though it says February, we're now in March as of yesterday. So this data is from January. So keep in mind that the data, because if you remember, we not only look at month to month, right, but we look month to year to date. So sort of to compare. And so this presentation will be relatively quick in comparison to some of the other ones I've done. And what I always try and say is, look, I'm trying to bring content that's relevant, valuable, but there's a couple things that I wanted to sort of just throw out there before we get started. The first is upcoming venues. I should be in town for the next, I think, 2 months, right? So March and April, I should be on the calendar. Put it on your calendar. Every week we'll be doing something. Next week, our presentation will be on a strategy that I've talked about before, but if you're not familiar, it's Kaizen. Kaizen, if maybe you haven't caught up or feeling behind on retirement, it's a strategy to use index universal life insurance properly structured to be able to help turbocharge or supercharge your retirement. It's not for everybody, but something we can look at to say, hey, maybe if you're behind, something we can look at. Following week, I'm going to do a presentation on, today's scams, right? Things that the criminal minds, criminal elements are doing in using technology. And I'm really saddened. I got a phone call on Tuesday from one of my clients, and I've relatively been working for about a year with her. She's a smart lady, right? She's holds a PhD, and come to find out, she called me in a panic on Tuesday looking to borrow some money. When I did a deeper dive, first of all, it's illegal for me to lend clients money or for me to borrow money. That's just a given. As a fiduciary, you're not allowed to do that. But part of my investigative questioning found out that she had done some online trading, and some of the platforms she had used futures and futures exchange in the past and had a relatively decent experience. Well, somebody who we'll term as a friend showed her strategy, and I'm suspect that this person is in fact a friend or is not involved. Let's cut to the chase. $700,000 gone. I spoke to an FBI agent yesterday, and unfortunately, because they did not use platforms, a couple of things in my conversation as she started to share that with me screamed fraud. Right? Things that should just never be asked, or, the communication that was coming from this company was aggressive and threatening and demanding and just smelled the high heaven. And it was relatively in a short period of time, 2 weeks, 3 weeks. And because it came from a friend, because it was something that she thought was safe, because she had some experience with it, did it in an unorthodox manner, unfortunately, I had to share with her the news that was given to me from the FBI, and that is you probably are getting nothing back. I decided, I spoke to my staff, I spoke to my compliance department, I've gathered some data to be able to present to the public, things that we watch out for, internally at our office, things that, we see come across through our channels, but even at home, my wife and I, emails, quick links, there's just so much technology out there that things look seemingly harmless or look legitimate are really technological scams. So I felt, not next week, but the following week, we're going to talk about some of that, because I think it really, really is important. And again, I hope if you ever have a gut instinct that something seems suspicious, call me. I'll share with you my opinion. And as I've always said, I'm not going to tell you what you want to hear. And that's what I think she was looking for. So, sort of this sort of guidance that everything's going to be okay. And in my heart, I hope that it is. I hope that I'm wrong. But as the FBI agent said, these people were probably in Nigeria and we're never going to catch them. And unfortunately, it's the that old adage, let the buyer beware. So and then after that, I'll put our calendar out as to what we have coming up. I think the following week I'll do February's update, right? So remember, this data is for January. February was a short month. And then I'll speak to that. So I just wanted to start the meeting off with that because, again, I haven't been the last 2 weeks as readily available to do our Thursday day with chat. We try and put notifications out there that, hey, listen, if you want to be on these calls, want to contact me, let us know. And the last thing I'm going to leave you with, I recently did a video and sent it out to everybody in my email list, which is the importance of long-term care. There's some things coming down the pike. So I'll use Washington. Washington State last year implemented a policy that if you did not have long-term care by a certain date and you were working, that you would be subject to a payroll tax. Well, since that's happened, right, Washington got flooded with applications. There's some litigation in place due to the constitutionality of it, but they're broke and they're looking for money to help people that are facing these long-term care challenges. That being said, 12 other states now have it on their platform and are very close to making that now a reality for a lot of us here. 2 of those states are right next to New Jersey. One is New York. The other one is Pennsylvania. So my staff and I are aggressively, I've been preaching long-term care for 30 plus years. My son has just gone through an experience with dealing with his grandmother and his grandfather, dealing with these later stages of our lives. And, it's not always pleasant. And, not only is there the caretaking side of it, the financial side of it, the emotional side of it, a lot of things can be done to make sure that what you want to have happen will happen when we get to those points in our lives. So the reason the video, I think, was apropos is because it's a survey that just says, hey, listen, if you were to experience an event, how would you want to be taken care of? So this 6-question survey, if you fill it out, will allow you to allow us to understand how you feel about it. Maybe you've had experiences with it, or maybe you've been thinking about it but thought that what most people think, that it's too expensive. That being said, I can tell you that we have solutions now from the cradle to the grave, right? It doesn't matter if you already are experiencing some elements of need. We probably have some types of solutions. So again, I think that with that said, I'm going to do a public event. That'll probably be in June. I got 2 public events coming up. One will be on Medicare, purely educational. It's going to be at Brookdale Community College. That's going to be on April 25th and 27th. We do not have a firm date yet for long-term care and that content, but it's going to also be at Brookdale Community College. And that will be probably the end of May and the beginning of June. So sorry for the precursor announcements, but I think that these are all relative and important topics that we should put on our radar. I'm here to educate the folks that are on these calls. So it's not just about the money and how much we have and how much we keep, but it's also about the journey. So without further ado, let's go. The markets, equity markets, this is a snapshot from the beginning of the year to the end of January. Real estate seemed to be the place where people gravitated towards. And then we have small caps, which is that baby blue. Hot pink is emerging markets. I always call that China. And then, but everything for the most part, except for commodities, right, was positive for the month. The next slide is an identical duplication because, again, remember, we're doing it month to month, and then we're doing year to date. So because there's only 1 month in January, the year to date slide, I just clicked it, is the exact same information. So as we look at our bar graph, which is what we call the triple cross or the 3 wise men, has 3 indicators. that are sort of, just bellwethers as to where do we see the economy heading. And we're still within this red line period, right? We don't have a crossover on equities, and we don't know, is it going to go up? Is it going to go down? Are we still on a downward trajectory? Is there still pressure? But right now, even though we see an upward trend, I still am cautious on equities in general. And this is the importance of diversification, right? So again, I know that this is relatively quick. It's going to be a quick presentation on this. The other side of the equation is, if we're not in equities, where do we put our money? Well, then that brings to the table income funds, right? Now, income, what I find here is that the hot pink was the 20-year treasury. So again, it's only 1 month, but what that says is that's typically indicative of consumer sentiment. If people are positive about the outlook of the future, they tend to put their money in these safe-like vehicles, right? But notice that all the income variables down at the bottom are pretty close. They're all above zero. Remember, last year was pretty, incomes got pretty beaten up. But that's because the yields, because the Fed has been raising interest rates, are starting to recover. But one of the things you got to remember, two things. A, if the yields, the interest rates are going up, you may look at your 401k and go, oh, the valuation is down, because they have an inverse relationship, right? So the Fed, in an effort to curb inflation, has been trying aggressively to raise interest rate. Now, the market has built that in a lot, but there's still uncertainty on the horizon. And I think you'll see that on the last slide. Again, this is a month to month, which now I'm clicking it again, and we go year to date, exact same data. So, instead of going in, I just want us to look at and say, you know what, overall, we haven't crossed over into a green yet, but it was good news if you're in a fixed income. And this is why a lot of things that we've been talking about when we send out email blasts, or we're talking about bond alternatives, are something called MYGAs, multi-year guaranteed annuities. We're seeing short-term interest rates that are attractive, right? CD rates that are attractive. Some of the safer money that is higher than it was a year ago. So these are places and alternatives. If we have short-term cash, if we're looking for safety, right? Maybe we don't want to be in the bond market. But what I've talked about before is actually before, where I've cautioned against bonds and bond portfolios and bond holdings. And I'm still, cautious, right? Because bonds, I think, are still, the valuations of your accounts don't like rising interest rates. And I don't think the Fed's done. So that means that all the money that you save there will be under pressure. But if you graduated to a fixed income and you're turning around saying, hey, the money that I'm getting from my portfolio, is it sustainable to give me something to fill that income gap between a pension, between Social Security and your lifestyle? Well, then the answer is increasingly yes, right? We're starting to see rates of return that we can have low risk, but get predictable income from our portfolios. And whether that's in the form of an income bond portfolio, if we're in some type of MYGA, multi-year guaranteed, a fixed annuity we've talked about before, or even structured notes, any of these vehicles can help us to diversify, to put into our portfolio. And one of the strategies I've been using with quite a few of my clients, I use structured notes more heavily weighted, because the structured notes allow us to get a little bit above average rates of return and repair or to heal some of the pain that we may have experienced on the downside on the equity side. That's why I always caution that if you make a knee-jerk reaction and try and shift, once you hit that button to sell your equities, you've locked in losses. Well, the same would be true with bonds. If you say, sell, get me out, you've now locked in losses. And so I'm always cautious about giving that advice. But if we can strategize and say, hey, I want to go forward, what does the horizon look like? What type of strategy should we have on to go forward? That's where we'll start to look at and saying, hey, let's build a portfolio or a strategy overall that can reduce our risk, give us some type of reasonable rates of return, and limit some of the volatility that we're going to see. So again, the last thing I want to talk about here is we have not seen a recession probability indicator this high. It's at 84. So, if you could argue that we were not in a recession, a technical term, and whether you think we are right now, again, remember this data was from January, not from February. So the question becomes, what does this summer look like? What does third, fourth quarter look like this year? And that's where I think that a lot of what we will see is maybe some more pain. And so, these indicators don't have any emotions attached to it, right? They're basically saying this is the data, and it takes 100 different data points. It's a unique tool that Formulafolio's created that just says, hey, listen, this is, housing starts, unemployment rates, right? Inflation, right? Interest rates. It takes all these factors, runs it through an algorithm and says, based on what we're seeing, either we're above 50 or below 50. Well, we're above 50 and have been now for a couple months. And it was hovering around there since May of last year. So now what does that mean? I think we're all feeling it at the pump. Now we're all feeling it at the grocery store. What happens if layoffs start? What's your plan, right? What happens? How are you going to get to? Right now, we've never been faced with the crisis. I just had a conversation on Tuesday with one of my clients that has retired, and they are nervous. They basically came back and said, listen, I think we're okay based on our strategy, but what happens if the government defaults on their Social Security obligations? Now, all the data suggest that it probably won't. Now, Medicare and Medicaid state, but Medicare probably would be challenged. Payroll for the military and for government employees might be challenged. So, but these are unprecedented times. But my comments to her at the time, I don't have a crystal ball either. But what I said is it seems unlikely if they do, for whatever reason, delay payments, it's probably for a couple days, not for weeks. So that's the first thing. The second thing, though, is that if the government just gets to this point where they've actually defaulted, we may start to see things that nobody on this call has seen in their lifetime. And that's depression. Now, I don't wish this on anybody. I hope that we can start to plan and protect ourselves. I've given her some advice that will help her to tap into assets should something unexpected happen, right? This is all we can do, right? As an ex-Boy Scout, right? I was a Boy Scout. I was taught be prepared, plan for the worst, and hope for the best. That's my advice to everybody on this call. I don't have a crystal ball. Our job is to guide you, not to scare you. Our job is to speak plainly and non-emotionally and give solid financial advice. So that's my topic today. I do see I have one call. While this is playing, I'm going to check these messages. The question was, what is the registration process if you want to attend these events? And this is the thing that whether you're either approaching 65 and might need Medicare, right? Want to apply for Part A, Part B, understand the process, how does that work? Then understand that that's the issue, right? We have health insurance while we're working, right? What happens if we get laid off? How do we bridge a gap until, is it cheaper to take COBRA? Everybody will automatically say COBRA is expensive, but maybe you haven't gone out to the private sector and looked at the marketplace that New Jersey offers, or maybe the state that you're located in. We can help with all that, help you to figure out a plan, because quite often employer benefits are richer than we can do in the private sector. But if you are segueing in, or maybe you've already entered into and you've already secured some type of Medicare coverage, supplement, Medicare Advantage, every year you have open enrollment and you can start to reevaluate and change that plan. We can help you understand this. It is a wiring nightmare for most people if you're not in this business. This is purely educational. So to answer your question, we will send out an email saying, here are the dates, here's the registrations. It's in the process. We are limited. I think, Caitlin, we're limited to 55 or 60 people in the room. I've been over there. This will be our first time presenting at that college. We used to do Rutgers Business School. Right now, they're still not taking people on. but we'll continue to get that information out to everybody. And as we bring these events, so if you think you'd like to attend, Tom, love to have you, and we'll go from there. So thank you, everybody, for taking time for joining us today, and I'll see everybody soon. Reach out if you have questions. Bye-bye.